What's the dealio? YouTube, we live. We are live. All right. It is Thursday. It is Thursday. And you know what that means. That means that we are on day 4 of this masterclass, this free live masterclass that we doing. And so tomorrow is the last day. All right. So today we're going to be talking about risk management, stop losses, when to get out, when to get in, all of that stuff. All right. So if you just if you just coming in, say what's up. Let me know where you tuning in from. If you catching a replay, let me know where you tuning in from as well. All right. So we're gonna start in a quick second. I just want to give people a little bit of time to come on. All right. So I hope everybody is well. I hope everybody is good. And we're gonna be talking about some good stuff today. All right. All right. So I don't want to waste too much more of y'all time. If you just tuning in, say what's up in the comments. Let me know, who's on live right now. Let me know who's tuning in. All right. Say what's up. I don't bite. So, all right. Today we're going to be talking about order types, risk management, stop losses, also when to get out of your stop loss or when to get out of your position. If you have Webull, I'm gonna show you some stuff on Webull as well. So stay tuned for that as well. Okay. So we got Vegas, we got Michigan. Can't wait to get into this one. From the UK. What up? What up? All right, cool. All right. So this video is all about risk management. All right. So at the end of the day, you have to first understand you are not going to win 100% of your trades. That is the first thing you want to know. You want to understand and you want to accept. I want you to know you are not going to win 100% of every trade that you place. Right? So if you're not going to win every single trade, you need to learn how to ensure that the times that you do lose, it's not too big so that you can continue on, right? The next thing is we have to understand that this is a game, all right? Trading stock options is a game. So when you play a game, you don't need to be looking at your account as if you lost money. More so look at it as points, all right? We got Dallas, Jersey, Fast Life, Texas. Okay, what's the dealio? Like this video for me when you get a chance. All right, so number one, you're playing a game. The game that you're playing can change your life. All right, so the first things first, I want you to understand that. So let's go into risk management first. All right, so when we're thinking about risk management, I want you to understand that you are playing a game of leverage. And I hope you have like a notepad, right? Take some notes because I'm going to touch on some important stuff. So you are playing a game, and the game that you're playing, you have an opportunity to be able to lock in and leverage money. And when you leverage that money, you're going to be able to get a return back from the money that you leveraged, right? So now this is what risk management is. So at the end of the day, you want to ensure that you're not losing a whole bunch of money. And you also want to ensure that you're protecting your capital. Okay? So first things first, let's talk about the average size account. All right. Let's say, so most people say, how much should I start with? Or I only got X amount of dollars. I personally think a great starting point is like $1,500 to $2,000, right? So let's say we're rocking with that. Let's go with $1,500 to $2,000 is the account size. The way that I think about it is, just for starters, okay, if I have $1,500, I'm going to divide that by 4. And then that's going to be the amount of money that I'm willing to risk per trade. And then I want to have my stop loss on each trade. All right. So if that's the case, let's do some math. You said I'd rather see profit, take profit, especially if it's news is about to drop. Yeah, that's definitely a principle. All right. So let's go at 1,500. 1,500 divided by 4 is 375. All right. So if you got 1,500 in your account, I wouldn't be risking more than $375 per trade. Right? That way, you get 4 opportunities to make money. Right? So if you risk whatever you risk, you want to have an amount that you're willing to lose. All right? So let's do the math real quick. If you take 4 trades a day and you make 10% per trade, and each trade you invest $375, 10% of $375 is $37.50, right? So let's say you win 3 out of the 4 trades. All right. Let's say you only take 3 trades and you win all 3. $37.50 times 3 is $112. That's how you make $112 a day. But the only difference is between that account and you making $1,000 a day is how many contracts that you purchased. Right? That's the only difference. So what you should do is you should divide it up by 4 and build your account up methodically. No matter what level your account is, you want to be able to divide your trades up. So if you say, okay, I want to take 3 to 4 trades a day, then what I would do is, if my account is under 5K, I'm going to divide it by 4 or maybe 5. If I got like a $5,000 account, I would divide it by 5 and say, okay, I'm going to invest $1,000 per trade. So however many contracts I can get for that $1,000, that's how much I'm going to invest into my option call or my option put, right? If that makes sense, drop that in the comments. Let me know that I'm making sense. I don't want to confuse you guys. I want to make sure I'm being very clear here, right? So regardless, if I got an account 5K or under, I'm going to divide it by 4 to 5. The higher I go, I can divide it out by more, right? Because the more money you have in your account, the less money, the more money you have in your account, you can make more money easier because you have more money to risk, right? So I would divide that by 4 to 5, and then I would say, okay, if I have an account of 1,500, then maybe 2 or 3 trades, right? Divided by 2 or 3, maybe 3, and then you can say, okay, I'm gonna take 3 trades a day. Instead of investing $300 per trade, I'm gonna invest $500 per trade, and I'm gonna get 10% on that $500, right? And that's $50. And so if you do that 3 times, that's $150, right? So, hey, K Genie, makes sense, facts. All right, cool. So that is how, when I'm looking at risk management, that's how I'm looking at it, right? Now, if you got 15, 20K in your account, you can leverage $4,000, and that's about what, 20% of your account. And if you take a 20% loss, that's not bad still, right? So you want to understand how much you should risk per trade. So if you have a stock, and let's say that the premiums on the option contracts, let's say you got $2,000 in your account, and the premiums are 12.5. That's $1,250. You don't want to get those contracts because that's over 50% of your account value that you're risking on one trade, right? Because what if that one trade goes wrong or if it goes bad? Then what happens? Now you down 25% of $1,250, right? So 20% of $1,200 is like, that's a fifth. So that's like $300, right? So you would be down $300 off of the $1,200, which would take your account from $2,000 to $1,700, right? But what if you just invested $600 out of the $2,000, and then let's say you're down 20% of that $600? That's a lot less. That's like $100 or a little bit. It's like $110. And so you're going to lose half or a third of what you would have lost if you would have invested more money, right? So understanding how to leverage your money to help it grow. So if you have an account, once again, it's $2,000. If you can make $50 to $100 per day consistently, let me tell you what that'll do to you, okay? So the first week you'll make, let's say you do $50 a day. Times 5, that's $250, right? So that $2,000 account now goes to $2,250, right? So let's say the next week you do it again, another $250. Now it goes to $2,500, right? Now, let's say that $2,500. Now, let's say the next week, the third week of the month, you make $500. Now the account is at $3,000. And in the fourth week of the month, let's say you make $1,250. Now the account is at $4,250. So you essentially doubled your account in 1 month, but only because you were focused on leveraging a small percentage of your account value and focusing on making 10% returns every single trade consistently. Those are the base hits. The 7%, the 5%, the 9%, the 10%. I call those base hits, right? If you keep focusing on the base hits, the grand slams are going to come, right? We had somebody in Discord today. She did 43% on Apple, okay? Do 40% trades come every single day? Not necessarily. But if you could continuously focus on 10% trade here, 8% trade here, and then 11% trade, and you 3 trades, you up 29% on your money that you have invested that day. And then 2 days later, let's say you get a 5% trade and then a 7% trade, and then you get a 50% trade. Now you up, right? So this is how you want to grow your account methodically and responsibly. So if this makes sense, let me know. All right? If that makes sense, let me know. So that's how I like to make it make sense. If you're able to trade 3 to 4 trades a day, what's going to happen is you're going to be like, okay, when I'm looking for my trades, I'm looking to be very focused because I only have 3 to 4 opportunities. I only have 3 to 4 opportunities to get this right. I only have 3 to 4 opportunities to really get some solid trades. So let me make sure that I'm being patient and waiting for the proper setups because I don't want to waste my trades. I don't want to waste my time. Right? So that's risk management, right? And here's another rule. So risk management is managing your risk, managing the money that you're leveraging, managing your account, but also managing how much money that you could potentially lose. That's another part of risk management. right? So not only do you want to manage how much money you're using and utilizing, you also want to manage how much money you could potentially lose. So let's keep those things in mind, right? So now that we got the now we have the foundation laid with risk management, okay? So now what we're gonna do we're gonna go to the orders, the like order types, and then we're gonna go into like the stop loss, and we're gonna spend a good portion of time on the stop losses, all right? But I want to make sure that we're building everything brick by brick, right? So this whole week was designed for you to be able to take one day and put it on top of the next day, and by the end of the week, you should be able to trade, okay? You should be able to trade. By the end of tomorrow, you should be able to trade. Okay? So this week was designed very intentionally for you. All right? So we started with risk management at the beginning of this live. We're about to get into order types. And then the next is the stop losses and stuff like that today. All right? So just be patient with me. Trust it. And ride with me, okay? So now, let's go into order types. So I use Webull for my trading, for my day trading. I use Webull. So the example that I'm going to show you is in Webull, all right? Now, you have my first month in the game, I made 500 and gave it all back. Hey, I know how that go. I've been there before too. I've literally had days where I made $200 and then I gave it right back and I was down $100, which means I lost $300 within 30 minutes. So I've been there before. Okay. Can you do a video speaking on how to choose the right strike price in the option play? So I made a video about that already on my YouTube channel. So go to my videos. But tomorrow we're going to be talking about all of that all over again, and we're going to go even deeper, right? Because I'm spending about an hour every day. So we're going to go real deep on all of those things, and I'm going to be able to answer those questions. So tomorrow we're going over that. All right. So now let's talk about order types. When you're in your brokerage, you have a couple order types, and I want to help you understand this because this is going to help you do what you need to do. So the first order type is market order. All right. A market order is, when you see market, what that means is you are buying the stock at the market price the second you click submit. Right? So with options, this could be good and it could be bad. It just depends on when you are using it. All right, and I'm going to go over that. The next order type that you're going to see is limit order. What limit order is you get to choose the price that you are buying your option contracts at. Right? You could set a limit order and say, hey, when the stock gets here, or when my option contracts get at this level, I will buy them. And it will automatically buy them. Same with stocks, shares. You can say, when this stock gets to $200, I want you to automatically buy those shares in my account. That is what a limit order is. All right? Now, when you're trading options, things do move fast. But I usually, 9 times out of 10, I use limit order. And let me tell you why. Let me tell you the pros and the cons of market order and limit order. Market order, you will get filled immediately, no matter what. You will get filled immediately, but the price may not be favorable to you. So check this out. Let's say you're buying into an option contract, and let's say it's a call. All right? So let's say the stock is moving up and down very fast. If you click on market, and you want the stock to go up, you might get, when you get filled, you might overpay for that contract, and then the contract could be at break even where you thought you got in at, and you could be down 10% immediately because you got in at the market order, which was just the stock market, whatever price the stock was, it's just going up and down. So you can't control it, right? So caution, I have had a limit order filled today at market price. This happened near market close. Yeah. A market, it filled at market price. That's interesting. So yeah, that's how market order works. Now, on the flip side, let's say you're in an option contract and you're up, and let's say the stock is reversing. If you try to get out at market order, sometimes that works to your benefit because it helps you get out immediately. And if it's a harsh reversal, if you would have tried to get out on a limit order, you may not get filled yet, and then you could still be in a play and you could be losing more money. Right? I hope that makes sense. So that's the difference between market order and limit order. So I want to pause and say, if you have any questions on the market order versus the limit order, I want you to ask those questions right now, because I want you to really understand the difference between a market order and a limit order. Because a market and a limit order are very, very, very important. And you have to know when to use them. I am 95% of the time using limit orders now, because when you don't know your entry and you're in a rush and you're just trying to get in plays, you're going to use the market order. But when I slowed down my trading and I started to get better and I started to understand, I stopped rushing and I was able to start doing limit orders because I was more patient. And what that did was, the second I got into a play, I wasn't down $200. And now the stock got to come up 90 cents just for me to break even. And I'm hoping that it keeps going up, right? So when I learned limit order and I learned how to use it, it was very, very, very beneficial to my life, to my trading, to my peace of mind and everything like that. All right. So those are the differences between market and limit order. So it doesn't seem like there's any questions about market and limit orders. So I'm going to move on. Hold on. Market guarantees entry and exit. Limit guarantees price. That's absolutely, Vernon. Yep. And so sometimes if the market is moving very fast, you may not get filled on a limit order. And you may have to try to, you may have to try 2 or 3 times. But it does control the price. But market control guarantees the entry and exit. Yeah. So the only time I will get into a market order is if the stock is moving fast, but I know it's going up because there's a lot of momentum and I know that I'm going to make my money. That's the only way I would get into market. Because otherwise, I'm controlling my entry and my exit. So I'm not pressed to get into the play. I'm waiting on the levels, right? I'm waiting on the levels. I'm waiting on the stock to prove itself. So because I'm trading like that, I can get in off of limit orders now. And I'm not rushing. He said, the fact that you pausing to make sure we understand. Nah, absolutely, man. I definitely care. I want to make sure y'all get it. All right, perfect. Yeah, ask and bid. Okay, so the ask and the bid. All right, the ask and the bid. You have, I'm going to pull up my Weeble real quick. So let's say Meta, right? So on your option chain right here, you got to ask and you got to bid, all right? So when you see ask and bid, here's what it's saying. When you try to buy your contract, you're going to have, on the left side, it's going to say ask, and then it's going to say mid, and then it's going to say bid, right? I always try to buy closer to the ask price, right? I try to buy close to the ask price. I mean, no. Buy towards the bid price. All right. So right here on Meta, the bid is 4.4, the mid is 4.5, and the ask is 4.6. I want to buy closest to the bid price, which is 4.4. Right? If I choose 4.4, I may not get filled immediately. The stock may need to come down a little bit before it gets filled, and then it will get filled at that 4.4 level. Right? If I enter in 4.5, I might get filled immediately. Right? If I get filled at if I ask at 4.6, which is the ask, I'll get filled immediately, but I may be down immediately in my play because I paid more, right, than I needed to at the time. So patience, if you place your orders closer to the bid, as long as the stock ain't going crazy and running up, you should get filled with a little bit of patience. And that little small discount that you got on that option contract, what's going to happen is you're going to get in at a lower level and you may already be up $20 or something like that. And then if the stock goes up, you already up, and now it's just going up and up, right? So that's the ask and the bid. And then when you get out, you want to sell closer towards the ask, right? You want to buy at the bid and you want to sell at the ask. But now it's the inverse. If you sell at the bid, you will get filled immediately because that's the lowest price. If you sell at the ask, it may take you a minute to get filled because that's the highest price, right? I should enter my own price. So I should enter my own price. You want to just enter closer towards the bid, right? Except in the situation with fast moving markets and you get filled at a market price. I have been around a long time and see this experience and see glitches. Yeah, that's what I said. The only way is when the stock is moving very fast is when I would get in the market if I'm very confident of the actual direction of the stock. To avoid slippage and price profits. Yep. So glad I said go with assets with tight bid-ask spreads to avoid slippage. Yep. So look, check this out. That's a good point. And I made this in this video. We're gonna go into this tomorrow, but spreads. Let's say I wanted to trade Spotify, right? Some stocks are better to swing just based off of the spreads, right? You don't want to day trade a stock that has very big spreads. So what I just showed you was 4.4, 4.5, and 4.6, right? That's a pretty decent spread. Now on Spotify, the spread is 4.0 to 4.8 to 5.75. What that means is you can pay anywhere between $400 and $575 for one contract. That's a very big spread. So I wouldn't day trade this. I would swing trade Spotify because the spread is so big, right? So yeah. Can you explain stop loss? We're about to get into stop losses. That's the next portion. But I want to explain. That's why I say trust this process, right? Because I'm going in a very particular order so that you guys it's organized, right? It's kind of like a curriculum. So we're going over order types right now. We're going over limit order and market order because this is very, very, very important. All right. My platform shows mid, which is where I try to target. Yeah, I usually target the mid as well. If there's really big momentum rally happening, it might be tricky to catch the bid, so you may need to raise your bid price. Exactly, right? That's exactly what I had said. You could raise your price or you could get in the market. It just depends. But that's why I always try to get in before those breakouts. The only time I see those breakouts, not the only time, but when the market just opens and the stock is going crazy to the upside or to the downside, I just let it find the support or resistance. I don't try to chase that unless it pulls back, and then I'll get in it, right? So yeah, if the bid and ask don't make total sense, it'll sink in over time. Yep. Nah, for real. Nah, for real. You're just gonna learn. You're just gonna learn, right? So you don't want to get in and not be able to get out. Yeah, yeah. I've been in trades when I was in my when I started trading. I remember I had traded Carvana, right? I was in a trade with Carvana, and it was going well. But I remember when I got in the play, I was down like $140, and I was confused. I'm like, what? And then it ended up going up, right? So I was up like $250, $300, and it took me like forever. It took me like 4 times to try to feel to get out. And then I didn't know why I wasn't able to get out, and it was the spreads, right? So you want to make sure that you're trading a day trading the stock with tight spreads so you could get in and get out fast. If the stock has large spreads, I'm not gonna day trade it. More so swing trade it, right? If it's in a like a uptrend or whatever. All right. So the next type of orders you have stop loss and you have a trailing stop. All right. Now we're gonna get into stop losses, and this is where everybody's asking. So let's focus on stop losses now. So with stop losses, you got a stop loss and you got a trailing stop. All right. A stop loss is you could set it in your phone or you could manually get out. A stop loss is, hey, I'm not going to let this, once this stock gets to, or once this option contract gets to this level, automatically sell my contract and I get out. That's what a stop loss is. A trailing stop is, I'm up 10%. If this contract ever drops by 5%, stop me out. But if it keeps going up, don't stop me out. So the only way I get stopped out, I can let it go up, but if it comes down by a certain percentage or dollar amount, then I'll get out. That's what a trailing stop is. And you can set both of those in your account as well. I have Webull. I'm going to show you how to do Webull. So buy at the bid, which is limit, sell at the ask, which is market. No. You have a market order and you have a limit order. Your limit order, you have a bid, a mid, and an ask. So limit is an order type. Market is an order type, right? So you buy at the bid and you sell at the ask in the limit order. That's what I'm saying. So let me know that makes sense. So now back to the stop losses and trailing stops. So you're in your Webull, right? I'm in my Webull. Let's say you already have a contract. You already bought a contract and you're in a call, right? Or whatever. Let's say you're in a call. The stock is going up. Now it comes back down and you're at negative $100, and then the stock goes back up to you're up $150. What you can do is you could come into your Webull and you click right here where it says order type, okay? You will be selling it. Right here where it says order type, you click on it. And then you got limit order, market order, stop order, and stop limit order. Okay? Then what you do is you click on stop limit order. And then you say, okay, what's the stop price? Okay, what's the stop price? If you have 2 contracts, you put it at 2 contracts. And then you say, okay, right here, it has percentages, -1%, 2, 5, 10. So you could say at -10%, you could say at -10%, stop me out. Boom, right? And then you go to next, and then you just sell it. So once the contract hits -10%, you will get stop out. All right? Is it possible to show it on laptop? No. Um, I have to. Yeah, nah. I'm showing it on my phone. I'm gonna make a video for desktop and mobile. I'm gonna make a recorded video, but I'm not gonna do it on a desktop right now. Because it looks it just looks different. And I trade and execute all of my trades on my phone. And most people are asking for the mobile. Um, but that's the stop loss. That's the stop loss part. He said, not being funny, but I thought you would show us from the. I know. Let me see real quick. Let me see real quick. Because it looks different on the laptop versus versus the mobile. So let me see something. Let me try to log in real quick. All right. All right. So let me see. Yeah, I don't know my password and I don't want to take up too much time. Yeah, on the computer. Yeah. I'll make a video, but I don't want to take too much time trying to remember my password on my laptop because I just have my on my phone. But yeah, so that's the stop loss, right? Now I'll try to have that for tomorrow and I'll show you guys on tomorrow. It would also look different on your brokerage account. Um, so Carlene, if you have screenshot from the phone, yeah, but I can't screenshot it and share that. Um, yeah, depending on the brokerage you have, it is gonna look a little bit different. But I have Webull. Some people have Robinhood. Let me see, and it is different based on the various platforms. Yeah, each platform is different. That's why I use Webull, so I'm just showing Webull. It's faster from my phone. I trade futures too, so I was kind of busy doing one the other day. Yeah, I think it. I think the. So here's the thing: when you can look on your, if you can look at the charts on your trading view, you can execute it on your desktop. Like I think that is simpler and it's easier trading from your phone, unless like you have like 10 trades and stuff like that. But yeah, so that's the stop limit order, right? It's very simple. Now the trailing stop would be the very same. I don't know how to do it on Robinhood. I don't know how to do it on Thinkorswim, but I do know how to do it on Webull, and that's what I'm showing you, right? All you're doing is you're going into the sell, and then you're going to go into order type, and then you click on it, and then you go to stop limit order. It's that simple. All right. Could you repeat trailing stop loss again? Information you're sharing simply needs to be applied to your specific. Yes, exactly. So yeah, so it just has to be applied to your brokerage, right? Like I'm giving you guys the actual principles, and then it's up to you to apply it for whatever brokerage you're using. All right, Francine, the trailing stop loss. Trailing stop loss is if I'm up 10%. I can set it to where if I go from 10% to 5%, I'll get out at 5% profit instead of going negative, and now I'm negative 10%, right? So a stop loss is I only want to lose $50. A trailing stop loss is I'm up $400 and I only want to be down when it goes down 5%, so I only make $300 instead of $400. Right? That's what a trailing stop loss is compared to a stop loss. All right. Yes. So the trailing stop loss, it trails your profits. Think about it that way, right? So a stop loss is okay, I'm not in a profit yet, or I'm up 2%. So if this play goes below 5%, stop me out, right? A trailing stop loss is I'm up 10%, I'm up 15%. I don't want to go back down to zero. So let me set a trailing stop loss and it will trail my profits. And the second that the play comes below a certain percentage, it'll stop me out, but I will still make profit on that play because I was already in profit. And this is how you don't let a green trade go red. This is how you do that. So that's what a trailing stop loss is. And you set that up the same way you set up a stop loss, but it'll just say trailing. Okay? So that's how you do that. Yeah. That's how you do that. It's that simple. All right? Now, here's the next part of it. And this is really where you start to know your stop loss. So what I'm going to do is I'm going to start showing the charts. And I'm going to start showing, based on your entry, what would your stop loss be? All right? Based on your entry, what would your stop loss be? So before we go there, this is a question I get all the time. What should my stop loss be? What percentage? So let's break this down. If you are scalp trading and day trading, you got to ask yourself, if I'm down, number one, it depends on how much money you have invested as well, right? What can you stomach? But if you're day trading, you have to understand that you probably don't have a lot of time on your contracts, so you have to be pretty precise, right? So if you have to be precise with how the stock moves, then your stop loss is probably going to be tighter. On a swing trade, your stop loss could probably be bigger because you may be operating in ranges. Like the stock could be down 30% on a swing trade and you could still be bullish to the upside. It just depends on the levels. And it also depends on like how much you're risking versus the reward. All right. So here's how I like to look at it. My day trades and my scalp trades, my stop loss is usually between, usually averages around 10% now, right? The better you get at your entries, the lower you can have your stop loss, right? Just think about it. There's something called drawdown. What drawdown is when I get in a play, what is my drawdown? What is the average amount that I'm down on my play? So that's something that you have to, number one, start to understand. Because if you have a drawdown of 30%, let's say every time you get in a trade, you find yourself down 30%. Your stop loss probably needs to be 5 to 7% so that it can train you how to enter in and what is a good entry, right? And the better that you get on your entries, you will have less drawdown, right? So on a scalp, 5 to 10%, I think is a good stop loss on scalps and day trades, simply because if you get your entry down right, you won't even have those problems. All right? You'll start to see that every time you get in, you're only down 1 to 2%, and then the stock usually goes in the direction. So if it's down 5% or 7%, then you know that this is not the trade to be in. Or you probably got in too early. Or you probably held too long. All right? On Robinhood, I see it says stop limit, but I don't see anything saying trailing stop limit. So yeah, that's where you're gonna have just go type in trailing stop loss Robinhood on YouTube, because I don't use Robinhood, so I can't tell you how to do that. Right? So yeah, so on my day trades and my scalps, my stop loss is usually about 10%. Now, if it's a day trade, right, depending on where you got in, it may be down 20%. It's all about my conviction, my expiration date, and what my actual strategy is, right? But before I get into a trade, I know if it's a scalp, if I'm holding it for the day, or if it's a swing trade. And I have a different account for the specific things as well. So one of my lessons or my principles is don't, before you get in a trade, you need to know what type of trade it is. Is it a scalp, 1 to 3 minutes? Is it a day trade, 30 minutes, an hour, 2 hours? Or is it a swing trade? That's going to dictate how you handle that trade, right? So those are my rules of thumbs. So I think as a beginner, it's good to have a stop loss of 10%. Because what that's going to do is it's going to train you on your entry. All right. So now, depending on your strategy, is going to dictate your stop loss. Now, let me go to the charts and let me show you where my stop loss would be on specific trades. All right. So we're going to go in the charts. If you're watching this video right now and you haven't, please like the video for me. Let's get this video to 50 likes. We almost there. All right. So let's go to a play. All right, this is Robinhood, okay? So let's say I wanted to get in on this reversal. So let's say I wanted to get in on this reversal right here. And this is a 5 minute. So let's say my entry point was right here. All right. If my entry point is right here, entry, right? If my entry point is right here, my stop loss, here's where my stop loss would be. My stop loss would be right here, and it would be right above resistance. All right. So stop loss right above resistance. All right. And here's why. Let's say I enter in right here, right? Now, my goal is to ride it down to this EMA right here, this orange line. On the 5 or the 15, it doesn't matter. It's the same thing, right? This is the 15-minute time frame. It looks a little bit different, so let's go to the 5 again. All right, so the 5-minute time frame. So I get in right here. I'm going to set a stop loss right here. So if the stock comes up here, I'm going to get stopped out. Let me tell you why this would be my stop loss. Because I may lose $50 to $70 right here, but if the stock comes down right here, I know I would be making about $200 to $300, right? So I am going to have a stop loss here, and my profit target would be right here. So here's where my profit target would be at the EMA. Profit target, EMA. 9 EMA. All right. So wherever the 9 EMA is, that's where my profit target would be. Right? That's how I would do it on this type of reversal. Let me know if that makes sense. Let me know if that makes sense. You're a bit tardy to the party. Are you shorting hood? I got my answer. No, that's a put. That's a put. That was just a day trade put. But I wish I would have got into that put right there, but I actually rode hood to the upside. All right. So yeah. So that would be my stop loss on a play like that. Right? So basically, if I'm trading off of levels, right? if I'm trading off of levels, and let's say my level is let's say my support is $60 and my resistance is $70, right? If I'm trading based off of levels and I get in a call at support, that would mean that I got in a call at, let's say, $51, right? And I'm riding it to the upside, and my target and my goal is $60 or even $55, right? So now, if that's the case, then I would set my stop loss at like $49, $49, maybe $48. Because if it comes down to $49, $48, what that would mean is that the stock broke support and now it's going down to the next level of support, and that could be $45, that could be $40, that could be low, right? So if I'm buying at support to ride it to the upside, my stop loss should be $1 maybe $2 below support. Because if it goes $1 to $2 below support, then that means that it's going down to the next level, right? Let me know that that makes sense. Because this right here, I promise you, this can revolutionize how you trade. It can help you make so much more money, and it can help you not lose as much money. I promise you. Right? I promise you. So that is how I would handle stop losses based on my entry and my exit. Let's go over another one, right? Let's go over another one. So let's say I want to get into Shopify. All right, they went crazy today. All right, so let's say I see this candle right here. So let's say I see this green candle right here, and then I see it close. If I got in right here, and let's say that that's my entry, right? Let's say that this is my entry. I would have a stop loss about, this level is 121. I would have a stop loss around here. All right. Yeah, I would have a stop loss around here. So we're going to put stop loss. Right? And the reason is because this yellow line is a 200 EMA. If the stock breaks below the 200 EMA, that means that we probably coming down lower. So if the stock comes down here, it's probably going lower, which is why my stop loss will be right here. You want to give it a little bit of room, but also understand that stocks always like to test these EMAs right here. So if I'm above EMAs, my stop loss is going to be around the EMAs, because that's where stocks are always going to try to come back to, right? Let's say I got into Shopify right here, right? So right here. So let's say I wanted to enter into some calls on Shopify right here, right? Let's say that this was an entry. All right, let's say that this was an entry. Now, my stop loss, here's where my stop loss would be. My stop loss would be about right here. Right? Because look what these stocks did. They came down here, but they went back up. So I would put my stop loss a little bit lower, right? So if I get in right here, at this candle and it drops below here, then I know we coming back down. But if I enter in here, it's gonna my stop loss is gonna be a little bit below the level, and then look what happened. It went up to the next level, and then that's where you want to take profits at. Let me know if that makes sense. Let me know if that makes sense. So that's how I would handle my stop losses based off of my entries, right? My entries and my exits. If you trade level to level, right? Hear what I'm saying. If you trade level to level and you get into calls at support, your stop loss should be a little bit below support. If it doesn't go below support, you will make a lot of money trading stock options. It's that simple, right? The mistake people make is when they start trading around the EMAs and everything like that, that's where a lot of people start to lose a lot of money because they don't understand that stocks are always testing and going up and down. So when you understand the power of a level bounce or the EMAs, you can allow yourself to trade methodically and you know what's going on, right? I literally saw Robinhood come down to support today and bounce off. Let me show you. Let me show you what happened. Look at Robinhood today. This is today, right? So Robinhood came up, rejected, came down, went back up, came down, and this was support right here. It literally came down here at support, and then it rode it back up. And then it came all the way up to here, right? So this is support. Stop loss is right here. If you get in right here and you put a stop loss right there, you ain't got nothing to worry about. But look what it did. It bounced off of support and then it came up. So this move from here to here, that could have made you like $500, $1,000. Right? So that's how you play the game, right? That's how you handle stop loss. That's how you handle and understand risk management, right? Understanding your order types. That's how you do it. That's how I do it. All right. So let's hardest ticker symbol in the game is HUD. It was today. It was a good one today. I'm gonna check them out tomorrow too. I think we gonna get some more money with HUD tomorrow. I think we're gonna do a rinse and repeat, honestly. If it come down to 61 tomorrow and then don't drop below, we making some money on HUD again. All right, so be ready for that in the Discord. But yeah, I want to open it up. I want to open it up for any questions. All right. So anything that we talked about today, I want to open it up, and whatever questions y'all have, we got a few minutes. Whatever questions you have, ask them right now, and we will go through them. All right. Meta is definitely the one. I love Meta. I will say that. I love trading Meta. Sure. What I'll do is, Carlene, I can look at HIMS tonight and I could just put it in I'll put it in the watch list tab. All right. Yeah, I'll look at HIMS and I'll put it in the watch list tab. All right. So yeah, but whatever questions that you guys have, HIMS did well after earnings and shot up. Yeah. I don't remember when their earnings were. I think it was last week or a couple weeks ago. But yeah, I remember hearing about them for sure. So yeah. But yeah, I'll check out HIMS tonight, and I'll let you know what I see in the watch list tab. All right. So do y'all have any questions? Do y'all have any questions that y'all want to go over based on everything? Tomorrow is the last day. Tomorrow we are talking about expiration dates, contracts, orders, execution, strike prices, deltas, Greeks, all those things. All right. So that's what we're talking about tomorrow. Um, will I get an email to get in the Discord I joined yesterday? Oh, what's going on? I thought you had got in. So you should already be able to get in. When you signed up, there should be a link prompting you to join the Discord, and you should be able to get in. If you having any problems, I want you to email me, Isaiah D. Fowler at Gmail. So email me if you have a problem and let me know, and will work it out. I thought you was in there. Do you use stop loss even when you get in a play for a couple of minutes? What I do is, if the play isn't really like going anywhere and I'm hovering around like 0%, 1%, then I will put my stop loss on, or I might get out. It just depends on kind of like where I'm at in the play, because I'm at a point now where like sometimes things are instinctual, but I will set a stop loss if the play ain't really going nowhere, because the play could reverse nasty on me and then I could be down by $200-300 like that. So I would set a stop loss if it isn't doing anything. If it starts to move really nice, then I'll immediately set a trailing stop loss. Does that answer your question? Let's go Fleetwood. Does Webull platform for option trading? Absolutely. I trade options and I use Webull, and I think it is user friendly. Some people will say it's a slightly confusing, but I haven't heard any complaints with it. I like Webull a lot. I like the aesthetic. I like how it looks. I like the interface and all of that stuff. So yeah, I like Webull. I like Webull a lot. Um, I like also, the thing I like about Webull is I feel like you're able to get filled on orders and things pretty fast. And like Robinhood, it will slow things down. And also sometimes when certain stocks are blasting off, Robinhood will stop allowing people to buy into that stock, and they also will stop allowing people to sell out of their positions. So you could lose a lot of money by being on Robinhood messing with the wrong type of stock. But I've never had that issue with Webull. If sometimes it's been where people on Robinhood, they can't buy into something, but on Webull I could if I wanted to. So there's no real issue with that. So yeah, yeah, I like Webull a lot. I like Webull a lot. Um, any more questions? This is the last call for questions, and then we about to be out of here. Let me know. You got any more questions? You got any more questions? Is a trailing stop loss under simple, group, or condition? Should be under group orders. Do you sometimes do leap options? Yeah, I'm in a leap option right now. So yeah, sometimes I do. But right now I'm focused on day trading, and I'm focused on swing trades. But the swing trades, my swing trades now are like 1 to 4 days. Um, I was in a like a 4 month Palantir, option that did cool. I did a Microsoft a couple like no like a week and a half ago. I bought it. My expiration date was in it was in March, but I only held it for like 5 days and then I got out. So yeah, I like my swings to be within the week probably. Do you use a stop loss for swings? Because some plays could go negative 50 cent. But exactly, that's exactly right. So with swings, I have a wider stop loss for sure. Like I've been down. I remember I had Coinbase swing. I was down like 60%, and then I ended up being up like 85% on that play. So with swings, sometimes you got to just let them play out. Like, and that's why people like swings, and it's easy to kind of like get into swing trading because you could kind of just set it and forget it. Because at some point in time, the stock is going to recover as long as we're in a solid market and it's a good stock. You know what I'm saying? So stock's not going to stay down forever. But the key is make sure you buy the stocks at a low level and make sure buy low, sell high, right? So the lower that you could get the stocks, then you want to go. All right. Do you do leap options? All right. Thanks. When you are placing an order, buy or sell, does the time frame matter? No. So if you're looking on the 5-minute time frame or the 15-minute time frame, it doesn't matter when you're buying the order inside of your brokerage account. All right. You're looking at the time frame to ensure that you're making the right trade based on the right time frame. That's what the time frame is for. All right. When I'm extremely confident in my levels, I would hold off on that SML and allow the play to play out. This avoids getting kicked out of my play. Yeah, I mean everybody has their own style. You know what I'm saying? If I'm super confident in my levels, I won't set a stop loss. So like, I'm the same way in that regard. If I'm very confident, I'm not gonna set the stop loss because you could be down 20-30%, and then it could turn around on a day trade. It's happened to me before. The biggest thing is, and we're going to talk about this tomorrow, you want to make sure that you know what your risk tolerance is, and also that you have enough time in your contract, and also that it's not decaying, right? So that's why I like getting in the money contracts, because they're more valuable as well, and they're going to hold their value. So if you're going to hold a option contract for the whole day, you more so want to get an in the money contract, because if you plan on holding it for some hours, 5 hours, 6 hours, then you most likely need to get an in the money contract so it doesn't decay and it's more valuable at the end and it's not eating into your profits. All right. I just want to say thank you for helping us to learn. Good teacher. I appreciate it, Cortez. Absolutely. That's what I'm here for. Like I always say, when I was really trying to learn options, there was not a YouTube channel like this that really like broke it down very simply. It was always just stuff that I didn't really like buy into, and it was like people would dangle a carrot in front of my face, and so I just want to try to put out what I wish I had. You know what I'm saying? So I appreciate that. Yeah, buy enough time to be right. Exactly. And that's, once again, that's why people love swing trading, because you could buy time, right? You could buy time. But what you can't buy is precision, right? You got to be precision. You got to be precise. I'm practicing the stop limit order on Webull. On some Kava, it shows actual numbers to input. On others, it asks for premium option number. And yes, thank you. I love the gold info. Thank you. I'm glad you guys are tuning in, and I appreciate y'all as well. If you're on here, be sure to subscribe to the channel. Be sure to like this video. Also, we almost had 1,000 subs, right? So I want to do something when we hit 1,000 subs. I don't know what it is exactly, but I want to do something. I'm about to put some stuff in the Discord. All right. One of a kind. I appreciate that. All right, y'all. I'm gonna get off. I'm gonna get out of here. Always remember, you guys, get out of your head and get into the world, because your head is a dangerous place to live. All right. Stop living in your head. Stop living in fear. Stop all of that stuff. You deserve the life that you feel like you deserve, but you have to stop being a victim to your own thoughts and to your own shortcomings and stuff like that. All right. So get out of your head. There's a lot of videos on YouTube that will confuse you. I like the way you break it down. Nah, for real. I know the confusion. I know feeling like I'm running in circles. You know what I'm saying? So try to make this stuff simple. If y'all want to trade with us tomorrow morning, be sure to join the Discord by tonight. All right. If you join the Discord by tonight, then you'll be able to trade with us in the morning. It's very easy. You pay, it's literally 40 bucks a month. And then you come in and you get in the Discord and you can trade with us. All right. And you trading with us, you'll be able to literally take the plays that we're calling. So it's very simple. All right. So I'll see you guys tomorrow morning in the trading room in the Prosperity Collective. I appreciate y'all time. I appreciate you tuning in. And I'm going to see you guys tomorrow. I'm dropping a video at 11 a.m. between 11 a.m. and 11:30. And then we going live again too. So be sure you tune in. All right. When you hit 1K, do the sea walk like Serena. I'm going to do that for sure. Appreciate you regardless of time in the market. There's always something to gain. I often ask questions to contribute to the community. Absolutely. Absolutely. Yeah, login is 9:15 a.m. All right, in the live the voice channel. All right, in the live trading room, 9:15 East Coast, 6:15 West Coast. All right, so y'all be there. We're gonna make some money tomorrow, and we're gonna get it in. All right, I'm gonna talk to you guys tomorrow. Peace.